Leasing a car looks like the smart choice. Lower monthly payments, a new car every few years, no long-term commitment. But what most people don't realize is that the real cost of a lease isn't in the monthly payment. It's buried in the fine print. And by the time you notice it, the money is already gone. Today, we're breaking down the hidden costs of leasing a car that dealers rarely explain clearly. When you walk into a dealership, everything is designed to feel simple. They focus your attention on one number, the monthly payment. $300, $400, affordable, comfortable. But leasing isn't about ownership. It's about rules. And if you don't understand those rules, you can end up paying thousands more than you expected. Let's start with the first one. Section 1. Mileage limits. Every car lease comes with a mileage cap. This isn't an arbitrary number, it's a critical part of the lease calculation. The entire agreement is based on a prediction of your car's value at the end of the term, and mileage is the single biggest factor affecting that value. More miles means more depreciation, and the lease is structured to account for a specific amount. The industry standard usually falls between 12,000 and 15,000 kilometers per year. For many people, that sounds perfectly adequate. It breaks down to about 230 to 290 kilometers a week, which seems to cover the typical commute and weekend errands. On paper, that sounds reasonable, but real life doesn't always cooperate with spreadsheets. Your work situation changes and suddenly your commute gets longer. You discover a love for weekend road trips. Your kids' activities add up, turning you into the unofficial team chauffeur. These are the small, unpredictable shifts in life that quietly push your mileage higher and higher. And in a lease, every extra kilometer matters. Because once you go over that pre-agreed limit, you're charged a penalty for every single kilometer. Typically, this penalty is between 20 to 35 cents for each kilometer over. That doesn't sound like much until you do the math. Let's say you go over by 5,000 kilometers over 3 years. At a common rate of 25 cents per kilometer, you suddenly owe an extra $1,250 at the end of the lease. This isn't a charge that gets added to your monthly payment. It's a lump sum bill that shows up all at once, right when you're returning the car. And most people don't plan for it. So what's the fix? First, be brutally honest with yourself about how much you actually drive, not how much you hope to drive. Check the odometer on your current car and calculate your real annual usage. Second, track your mileage during the lease. Set a calendar reminder every 6 months to check your odometer against your allowance. Finally, if you think you'll be close to the limit, ask about buying extra mileage up front. It's almost always cheaper to pre-purchase kilometers than to pay the penalty at the end. Section 2. Wear and tear fees. This is the part of the lease end process that catches many drivers completely off guard, often turning a smooth return into a stressful and expensive ordeal. It's where the definition of normal use gets put under a microscope. When you return your leased car, it undergoes a detailed inspection by a third-party agent. They aren't just glancing it over. They are meticulously documenting every single imperfection, comparing the car's condition against the strict standards set by the leasing company. They're looking for what's deemed excess wear and tear. This can include paint scratches longer or deeper than a credit card, noticeable dents, and any chips or cracks in the windshield. Curb rash on the wheels is a very common charge, as are interior stains, rips, or burns. Even tire tread depth is measured. If it's below the minimum requirement, you'll be paying for new tires at a premium price. What feels like normal everyday use to you can easily be classified as excessive. The problem is, the standards can feel subjective, and the resulting charges are often far higher than what you'd pay to fix them yourself. That small bumper scuff a local body shop might fix for $150 could be billed at $400 or more by the leasing company. It's not unusual for people to receive a bill for hundreds, sometimes well over $1,000, for a handful of minor cosmetic issues they barely noticed. So how do you protect yourself? The smartest strategy is to be proactive. About 60 days before your lease ends, schedule a complimentary pre-inspection. This gives you an official report of potential charges, without any obligation. With that report in hand, you now have a choice. You can get quotes from independent detailers, wheel repair specialists, or body shops to fix the issues yourself, often for a fraction of the cost the leasing company will charge. This simple step gives you control over the final bill, turning a potential financial shock into a manageable expense. Section 3. Early termination penalties. Life is unpredictable. A new job offer in another city, a growing family needing a bigger vehicle, or a sudden change in your financial situation can happen to anyone. While our lives are dynamic, lease contracts are rigid. Ending a lease early is one of the most expensive and misunderstood mistakes a person can make. Many people assume they'll just pay a small penalty, maybe a few $100s. The reality is often a bill for several thousand. Let's look at a common scenario. Imagine you're 14 months into a 24-month lease. You need to terminate. The leasing company calculates the difference between your remaining lease balance and the car's current wholesale market value. Because cars depreciate fastest at the beginning, this gap can be huge. You're responsible for that entire difference, which is the remaining depreciation. On top of that, they'll add administrative costs and a specific early termination penalty. In some unforgiving contracts, you could even be on the hook for all remaining payments. There is no negotiation after you've signed. So what are your options? Some leases allow transfers. Websites act as a marketplace to find someone to take over your lease. However, the original leasing company must approve the new lessee, and there are transfer fees. Crucially, many contracts state that you, the original signer, remain liable if the new person defaults on payments. Another path is to buy the car from the leasing company at the buyout price and then sell it yourself. But be careful, the buyout price is often higher than the car's private sale value, meaning you'd still face a loss. If there's even a small chance you won't keep the car for the full term, leasing may not be the right choice for you. Section 4. Insurance requirements. This one surprises a lot of people. Leased vehicles often require higher insurance coverage than owned cars. Full comprehensive coverage, higher liability limits. That means higher premiums, sometimes much higher. A lease with a low monthly payment can quietly push your insurance cost up by hundreds of dollars per month. But dealerships rarely include insurance when quoting affordability. They talk about the lease, not the total cost of ownership. Before signing anything, call your insurance provider. Ask for an exact quote based on the lease requirements. That one phone call can save you from a nasty surprise. Section 5. Acquisition and disposition fees. Now we get to the fees almost no one talks about. First, the acquisition fee. This is charged at the start of the lease. It's a processing fee, often between $500 and $1,000. Then there's the disposition fee. This is charged when you return the car. It covers inspection and resale costs, usually a few $100s. These fees don't reduce your payments. They don't add value. They just exist. And when people calculate the cheap cost of leasing, they often forget to include them, which makes the lease look better than it actually is. Section 6. The big picture. Here's the uncomfortable truth. Leasing isn't always bad, but it's rarely as cheap as it appears. When you add mileage penalties, wear and tear charges, insurance increases, start and end fees, the total cost can rival or exceed owning. The difference is timing. Leases delay the pain. They spread it out, or push it to the end when people are least prepared. That's why understanding the fine print matters so much. Before leasing a car, don't ask only one question. Can I afford the monthly payment? Ask this instead. What will this actually cost me from start to finish? Because that answer is where the truth lives. If this breakdown helped you, this channel exists for one reason: to explain the fine print most people never read until it's too late. New videos break down hidden costs, financial traps, and everyday money decisions. No hype, no selling, just clarity.